Whoa, buddy. Put that thing back in its holster. We haven't gone anywhere.
I don't understand.
Check out the MichaelDukesShow.com for information on how to get access to the podcast.
Welcome to the party, pal.
The Michael Dukes Show.
The greed and the entitlement is astounding to me.
What more could you want from a low-budget radio program?
This is a dumpster fire.
That was just BS.
It is time to get a new perspective.
We know just what you need, and we've got just the cure. Open wide and prepare for a steaming hot cup of freedom.
I just don't fathom it.
The Michael Dukes Show, streaming live across the world.
Live around the world on the internet at michaeldukeshow.com and across the state of Alaska on this, your favorite radio station and or FM translator. Good morning, my friends, and welcome to the Tuesday edition of the Michael Dukes Show. Oh, my goodness. We have got quite a day lined up for you. Are you ready? We're going to be jumping in on this and getting things squared away. Tuesdays means, of course, the weekly top three, where we get a chance to talk with Brad Keithley from Alaskans for Sustainable Budgets about three big issues that that he thinks are important. I guarantee I know what one of them is going to be because I was railing on it yesterday, and I think Brad's going to take that one up immediately. This whole crisis in the making, or should I say this manufactured crisis in the making. And we're going to go over those three things with Brad in hour one. Then in hour two, we'll be joined by Chris Story for our weekly Betterment segment and more after we do a recap of Brad's commentary and shows and everything else. So it's going to be good. It's going to be good. So let's without further ado, let's get to it. Joining us from Cape Breton over there all the way on the other side of the planet is Brad Keithley with Alaskans for Sustainable Budgets. Good morning, Bradley. How are you, my friend?
Michael, I'm doing great today. How about you?
You know, again, just another beautiful day in paradise. No snow. Thank you for all you who have been doing the anti-snow dance for me. I appreciate that. My goal is to try and see if we can keep it off the ground and from sticking until maybe Halloween. I don't know. I'm trying to live a little bit of a fantasy world here, Brad, but I'm doing it as best I can. How about you? How are things going?
I'm doing great, Michael. Do you have a snow dance that you've been doing? Are there steps to it?
No.
In Cape Breton, we do a lot of square dancing and a lot of steps. So steps are important.
Oh yeah, no. I just kind of look to the heavens and go, please, Lord, please don't do this to me. That's all I do to get it done. All right, Brad. Well, let's get cracking and start talking about this. Yesterday, I had my own kind of little deep dive analysis, and that's where we're going to start today in number one, which is the Permanent Fund. And the Permanent Fund Corporation playing right into the hands, or actually working, I guess I would say, almost in lockstep with some of the powers that be, including Bert Stedman, in trying to take advantage of a manufactured crisis. And that, of course, is this whole hand-waving freakoutery over the inflation proofing in the fund and how it's just not been done the right way, or there's not enough, and how the permanent fund's going to run out of money. So we need to have access to the corpus. And that is where we start off with number one today.
It is. And Michael, I'm going to sort of overlap with some of what you said yesterday, because I listened to it and enjoyed it and appreciated it. But I want to emphasize how horrible this scheme is that the Permanent Fund Board may be putting forth. As I sent you the lead-in yesterday on things I'm going to talk about, the lead-in is first they came for savings, then they came for the PFD, now they're coming for the Permanent Fund Corpus. And that's all this is. This is a continuation of what started back in the early 2010s when the legislature started in on draining savings to help support spending. That sort of ran its course. We ran out of savings 2016, 2017, and then they started in on the PFD, and we've seen where cutting the PFD and diverting that to government spending, and we've seen where that's gone over the last several years. And now the concern is that's going to sort of run its course. I mean, at even 25.75, Bert's proposed, the Senate Finance Committee's proposed 25% of the POMV draw to the permanent fund dividend and 75% to government. Even that isn't enough to fund the projected government spending levels at the declining oil levels by the end of the decade. So they sort of see that coming. And now, as a continuum, first they came for savings, then they came for the PFD, and now they're going to come for the permanent fund corpus. As a continuum, that's all this is. It's setting up a rate on the permanent fund corpus. You've talked about it on the show a lot. I appreciate that. I've learned from that. But basically, what this is a setup that says, look, if our long-term real rate of return after inflation rate of return is going to be in the 4% range, and we're paying out 5% per year of the permanent fund's value to the legislature, we're going to run out of money. I mean, you're going to set yourself on a course where the payments out are going to be higher than the income coming in over time, and you're going to gradually drain down the permanent fund corpus. That's all this is. That's all this is. That's all this is set up to do. And that's just, I mean, that's got to be coming for the permanent fund dividend, I think was unacceptable, but coming for the permanent fund corpus, I have to think is crossing the line. And the fact that the permanent fund board is getting ready to propose this is just outrageous. I mean, it's building into a column that I'm going to do at some point here in the landmine about why this permanent fund board has to go, why we have to restructure the permanent fund board. The permanent fund board's sole purpose, well, two purposes. One purpose is to generate earnings for whatever statutory purpose the legislature wants to put to it. And the legislature's got the PFD, and the statutes have the PFD and the remaining that goes to government. But their second purpose, and probably the overriding purpose, is to protect the permanent fund corpus. And they're setting up a situation in which the permanent fund corpus will be drained. That's what this does. So for the permanent fund board to be involved in this proposal, for them to be the ones taking the lead in the proposal, I would say is operating against their obligations as the board, that they're undercutting themselves. They're undercutting their own objectives. They're violating their own fiduciary obligation to protect the permanent fund corpus. So it's outrageous on a number of levels. It's outrageous that we've now got a situation where we've gone through savings, $15 billion in savings. We've gone through savings. We're going through the permanent fund dividend, and now we're attacking the permanent fund corpus. One other thing that I want to make the point, and I know I'm not popular when I make the second point, but I want to make it. This is designed to protect two interests. One is government spending. They want to be able to continue to take the 5%, even if the real rate of return is less than 5%. They want to be able to continue to take the 5% to support government spending. But second, and I would argue a co-equal objective of this, is to protect the top 20% against taxes, to protect the top 20% oil industry and non-residents against taxes. Because what's happened when we've seen this with the PFD, we've seen this since 2016, 2017, when the PFD cuts start. What's happening is the top 20%, because they don't have to pay for it, they're not pushing back on spending. And so, Kathy Giessel, in fact, they're even getting out in front of it. Natasha got out in front of it. Kathy Giesel's getting out in front of, urging more spending for defined benefits. You see other senators and representatives pushing increased K through 12 spending, restored university spending. They are out in front of pushing for additional spending because they don't have to pay for it. They have first used up savings. They've second, diverted the PFD, and now they're talking about using the permanent fund corpus to continue spending that they don't have to pay for. So they don't have to help put on the brakes. So it doesn't affect them, and they don't have to help put on the brakes for continued spending, so that they will continue to be protected, held harmless, protected from continued government spending. They don't have to bear the burden of it. So it's just, I mean, it's designed to do two things, but at the end of the day, I think the permanent fund board being involved in this is just nothing short of outrageous, and just nothing short of an abdication of their responsibilities as a board to protect the permanent fund corpus.
You know, as I look at this story and I look at the way James Brooks wrote it, and I talked a bit about this yesterday, but they go on, you know, talking about, you know, how, oh, this is the inflation proofing because it wasn't done right and we're running out of money and everything else. And, oh, but we can learn a lesson from New Mexico because New Mexico socked away money when they had high cotton season and they did all this. And I mean, there's no discussion of, one, the fact that over the last 6 years, Burt Stedman and company have socked away $8 billion out of the
Right.
out of the earnings reserve into the corpus, which wasn't tagged as inflation proofing, but it effectively was a massive amount of inflation proofing. The fact that the POMV formula already had inflation proofing baked into it, and basically what they failed to say here, but if you read between the lines, you can see it, is they are spending too much based on what they have. And as you said, the take is too much for what the inflation proofing and everything else does. It all comes back to the fact that they have a spending problem, not a revenue problem. That's what it comes back to.
And they have it.
And the disingenuousness of that, of saying, oh, it's all because of inflation proofing and this, and no mention of the monies that we said. And of course, on your chart, no mention of the fact that they're showing all the income from this year and then future expenditures, but no revenue from future years, kind of thing.
Oh, it's clearly a manufactured crisis. It's clearly, I mean, I don't know, maybe count 3 of my column on the permanent fund board is going to be, you know, they're fiddling with the accounting. They're making up the accounting in order to manufacture the crisis. Clearly, they're doing that. Of the $8 billion, $4 billion explicitly at the time that $4 billion was put in was for the legislative purpose of pre-funding inflation proofing. They haven't even used up that $4 billion yet, and then they put in another $4 billion, which the governor tried to veto, but he crossed the wrong line or he did something wrong, and so that $4 billion went in there also. And you know, following the purpose of the first $4 billion, it should be in there for inflation proofing. We are fine if you do the accounting right and you account for the $8 billion that's gone in there for pre-funding inflation proofing. We are fine through the end of the decade. We don't run out of money unless we continue. Well, we don't run out of money, and the permanent fund's in great shape. This is all because they see, you know, continued pressures of spending coming, or continued spending down the road. They don't want to pay for it themselves. They don't want to burden themselves. So they're just finding some other pot of money to go tap. Savings first, PFD second, PFD cut second, and now the permanent fund corpus. And yep, it is a manufactured crisis. If they did the accounting right, it wouldn't be there. But you know, it's a crisis. It's a crisis. They're gonna. James Brooks understands the accounting problem and the accounting issue, but James Brooks didn't even bother to mention it because, you know,
I'm just going to say the worst part was he mentions New Mexico moving $8 billion in to bolster their funds. And it's exactly the same amount. That's the irony of it. He never mentions the fact that we transferred $8 billion from the ERA to the corpus, some of it with the explicit intention of inflation proofing the future. He never mentions it. Is, I mean, it's willful blindness or it's intentional at this point.
It's the same problem that we have generally with the press in this state. The press in this state goes and touches base with, in this case, the permanent fund board, spokesmen for the permanent fund board, and a senator who's advocating this step. They don't look for the other side, and that's an endemic problem not only with the Alaska Beacon, but with the AIDEA, Juneau Empire, although they sometimes do a better job at it. journalism is supposed to be balanced, right? It's supposed to be this guy said this, and then this guy on the other side said that. They never look for that. They just go with whatever the press release is, or whatever the leadership of the Senate wants them to think, or leadership of the House wants them to think. They also quote Bryce. I mean, it's Bryce. Yeah. Bryce now seeing the end of days of the PFD cuts is now looking for the next pot of money, and it's the permanent fund corpus. It's it is absolutely the wrong thing, and truly, I think that it should build into, as I talked about last week, and I'm talking about it again this week, and I'll probably talk about it in future weeks. Truly should build into a concern about what's going on with the permanent fund board, and whether the permanent fund board is complying with the obligations and duties that it has to protect the permanent fund.
It's frustrating, and the fact that every member of the permanent fund board was appointed by Governor Dunleavy makes me ask even deeper and bigger questions as to what's going on. Are they complicit in this? Is there something else going on? What kind of backdoor meetings have been happening for this whole thing to come down to this point? It's astonishing. All right, Brad, what are we doing in number 2 quickly?
Number 2 is going to be about AIDEA and the Alaska Industrial Export and Development Authority, and it's going to be a not dissimilar rant about AIDEA's what AIDEA's up to, as the rant has just been about the permanent fund board.
All right, we continue with Brad Keithley, the weekly top 3. The Michael Luke Show continues. We'll back with more right after this.
What is that?
Common sense.
Regularly heard on American radio.
Michael Duke Show. Radio.
Brad Keithley, Alaskans for Sustainable Budgets, our guest. Brad, I ended up saving this story for late yesterday, and I'm glad I did, because I get so agitated when I start thinking about it and diving into it, because it is so apparent that the fix is in. This is a crisis that was created by Bert Stedman and company to begin with, and now the Permanent Fund Board has either played into their hands or is just outright complicit in this whole thing. I mean, as you read through this story about the Permanent Fund Board and their recommendations and everything they're saying, this all comes down to how much are we spending? That's what it is. We're spending too much. And so the answer is, well, we need to do this, and have access to the corpus, which just means it's going to continue. There's no governor on the amount of spend. They just want access to the next big pot of money.
They want access to the next big pot of money that doesn't cost them anything. They want access. So draining savings was essentially a tax on future generations, right? We took away the safety net that had been built up for our generation. When we got to the 2010s, we took away the safety net that had been built up for our generation. We've drained that, and we're not leaving anything in a safety net for future generations. So when they hit their fiscal crisis, as they will, in the same way that we hit our fiscal crisis, as they hit their fiscal crisis, there's going to be no safety net there. They're going to have to tax themselves to pay for it. Unlike what this generation is, we got off scot-free because we had savings. So we drained savings. So nobody had to pay for the additional savings or the additional spending. Now by 2016 we sort of ran through that, so we needed some other fund. So they started cutting the PFD. So they didn't. So the legislature, by far and large, the legislature and their donors and the court and the oil companies didn't have to pay for it. Yes, somebody's going to have to pay it, but we found a way to shove it off on middle and lower income Alaska families. So we don't want to stop spending. We don't want to push back on spending because we'd be the bad guys. Natasha doesn't want to be the bad guy. Giesel evidently anymore doesn't want to be the bad guy. And we want to continue to spend, but we just don't want to pay for it. So with the PFD, they found this unique way to slough it off on middle and lower income Alaska families. And now, if you start draining the permanent fund corpus, again, it's a tax on future generations. You're taking down the ultimate savings account in order to avoid you having to pay now for the costs of government that you're passing, but sloughing it off on future generations, and not only not leaving them a fiscal safety net in terms of savings, but now you're not even going to leave them much of a permanent fund corpus, and so the contributions that they're going to get from the POMB draw. I mean, the POMB draw is going to go down 5%. If you take more out of the permanent fund corpus than you're putting in, the balance of the corpus goes down, and 5% of that corpus keeps going down. So they're leaving future generations with less than what this generation, and it's also what this generation's gotten for itself, and it's also that they can continue spending, and the top 20% don't have to pay for it.
Right. Which eventually, the irony of this whole situation is this is just a delaying tactic, because eventually there will be taxes. That's the thing. I mean, eventually, as they go through, there will be taxes. Maybe not this year. If they get access to the corpus, it may be 20 years, but eventually somebody's going to have to pay. And of course, by that time, we'll be drained of money and it won't matter. I mean, at that point, I guess maybe that's what they think. I'll be dead. It won't matter 20 years from now, somebody else will have to deal with the problem, kind of thing. I mean, that's the whole point there.
It reminds me of a comment that Gary Stevens, the president of the Senate, supposedly made at some point about, I don't care. I'm only here for 4 more years. I just want to get through that. I don't, what happens beyond that, somebody else's burden. Exactly.
This is a typical problem with the Alaska legislature. Retire, move away. Not my problem anymore. Gary's already moved away already. He's just filling time till it's all done. Here we go. The Michael Duke Show. Common Sense Radio. Like, share, follow. Let's get to it.
The Michael Duke Show. Not your daddy. Wait, sorry. Not your daddy? Ooh, not your daddy's talk radio. Whew. I was scared for a second. Thought we were going down. Here's Michael Dukes and the show.
Yep. We're back to it. The weekly top 3, number 2 right now. Brad Keithley, Alaskans for Sustainable Budgets. AIDEA is the topic of the second of the weekly top 3. Brad, rant away, my friend. What's going on with AIDEA and this whole Mustang LLC thing and all that stuff?
So there was a column in the Alaska Journal of Commerce. It was in the Alaska Beacon before that. James Brooks wrote about it in the Alaska Beacon, but it was republished in the Alaska Journal of Commerce from a couple of weeks ago. It didn't make the top 3 last week, but it sort of moved up in my mind. The problems with the Permanent Fund Board just sort of dragged AIDEA up in my mind along with it. And the headline is, after being bailed out by the state, North Slope oil field is targeted for sale. And this talks about one of the smaller oil fields up on the slope, originally developed by, I think, Brooks Range was this one. And Brooks Range spent a lot, didn't get it into production. And when production came, it wasn't very much. And somewhere along the way, talked the Permanent Fund, or talked the AIDEA into, I'll get back to the Permanent Fund about this in a second, but talked AIDEA into loaning them money. The article says, before the foreclosure, Brooks Range subsequently went bankrupt. It wasn't able to even with the AIDEA loan, wasn't able to get the field up and running and generate enough revenue to pay off its costs. It ultimately went bankrupt, and the AIDEA loan went into foreclosure, so that AIDEA got the assets that had been underlying the loan. Before the foreclosure, AIDEA spent $72 million developing the oil field and supporting infrastructure, not counting a special $22.5 million bridge loan from the Alaska Department of Revenue that went to Brooks Range.
So they're $100 million deep in this already, right?
Budget documents show the investment bank has spent additional money, the investment bank being AIDEA, has spent additional money since then to maintain the project with little to show for it. Now they're getting the point. This article is about a proposed sale by AIDEA to a small company called Fintex, I think, and how AIDEA's pursuing that as a way of as a way of dealing with this asset that they had to foreclose on and spent so much money on. There's no indication, by the way, in the article about how much they're getting paid from fintechs for the purchase, whether it's covering the investment, even covering the investment they have in it, much less the any sort of return on that investment, the foregone interest that they have. No discussion about what the terms are. There's a hint that they aren't great because Randy Raro, the chief executive of AIDEA, is quoted as saying that they're covered by the purchase is covered by a letter of credit from a bank, and so they'll get paid either way, regardless of how the project turns out by fintech. Well, the only time you need a letter of credit is in a situation like this is when you're getting paid in installments, and you're concerned about whether or not you're going to get the future installment payments once you've handed over title to the asset to the other party. So it sounds like they're selling this on the installment plan, and that they're going to get paid in installments, and they've got a letter of credit to back it up in the event the installments don't come through. But it doesn't tell you how much the letter of credit is or how much the dollars are. The rant on this is not so much the sale. I mean, when you've got a bad asset, if you can sell it rather than continue sinking money into it, you can stop the bleeding and you can get some value out of it before it just completely implodes. That's a good thing. The rant is about how AIDEA gets into these situations in the first place, and why it's making a loan like this for a small oil field that's having trouble, the owner of which is already having trouble. Why it's doing that in the first place? It's propping up the market. It's propping up that oil company, because evidently the oil company couldn't get a bank loan, or couldn't get it on terms that were attractive for it. So AIDEA came in and shortstopped that. Why is AIDEA getting into these things in the first place? Another one that AIDEA is involved in is the Ambler Road, the road out to the Ambler mining district, 200-mile road. They've got there's only one mine under development on that road. It can support, AIDEA is talking about financing that road with the cost of that road, which may be more than $1 billion, talking about financing that road with 30-year bonds. But the project, the one mining project that's under development on that road, only has enough for 3 years. So it's not even close to being enough to cover the cost that AIDEA is pushing forward to spend to develop that road. They justify these things. AIDEA justifies these things. It means jobs and economic development, and these are projects that otherwise might not lift off the ground, and we're helping out getting jobs and economic development. Well, hang on a second. Where's this money coming from? And it's coming, the marginal source of revenue anymore in this state is PFD cuts. And so we're taking money out of the pockets, out of the Alaska economy in terms of PFD cuts, in order to give it over to, in the case of the Brooks Range oil project, giving it over to an oil company, or ultimately its creditors, or we're giving it over to AIDEA to finance a road, maybe a road to nowhere, in terms of mining development. They're financing these things, telling themselves these are good investments based upon prospective jobs and prospective income, prospective impact on the economy. But in order to finance them, they're taking it out of PFD cuts and taking it out of things that absolutely do generate jobs and generate economic impact in the economy. So it's taking money from middle and lower income Alaska families and putting it in these speculative projects that may or may not pay out, in order to finance jobs that may or may not come to exist, and finance economic development that may or may not come to exist. It's a bad trade. And I think that AIDEA has really, another example of AIDEA going overboard is the ANWR leases. AIDEA was the only remaining holder of leases up in ANWR before the Biden administration terminated those leases. And it's just, AIDEA, I think, is sort of like the Permanent Fund Board. They're sort of losing the sense of their mission. Their mission isn't to go out to the bleeding edge and finance things that may or may not come to pass. They're sort of to, try to be a good source of financing, partial source of financing for projects that, have a lot of certainty to them. You ought to look at them like a banker, not like an investment banker putting a lot of speculative money out there, especially when it's not your money that you're speculating with. So I think AIDEA's lost a sense of its mission as well. One more thing on this, and it goes back to the Permanent Fund Board. Remember the Permanent Fund Board's in-state investment program? And we've talked about it on the show before, and no doubt we'll talk about it again. But that's really what the Permanent Fund Board was trying to do. They were trying to get in the investment banking business and say, look, we'll be a source of funds for in-state Alaska developments. And we've already got AIDEA doing that, in my view, doing it poorly. We don't need the Permanent Fund Board layering on top of that, going down the same road. So we've got it. These boards, I think, are going beyond the boundaries. Permanent Fund Board, certainly in the case of advocating for the new proposal, and AIDEA, just going out for becoming the financing source for speculative projects.
What's AIDEA's? Their track record's not great to begin with, right? I mean, their track record historically is not great to begin with. I mean, they have thrown money after so many different projects that have gone just belly up and flopped. I mean, it's not something that you would want to invest money in. If you were investing alongside AIDEA, you'd be broke at this point. Yeah,
historically with the permanent fund, you'd made a lot of money, but historically with AIDEA, you wouldn't get the return. And it's the one project they keep pointing to is the DeLong Mountain Road, which is the road that runs from the Red Dog mine out to the port that hauls away Red Dog minerals. And AIDEA keeps pointing to that as that it otherwise wouldn't have happened. It was a great investment. We're making money on it. Look how good that's turned out. Well, and so they point to that for Ambler, and they also point to it for other things. We know what we're doing. Look at this road. Well, that road was like a 20-mile road compared to the Ambler 200-mile road, and that was to a mine that was already under development and had proved its ore. One mine, not depending upon a bunch of mines, but one mine that was under development and had proved its ore content before AIDEA made the investment. Otherwise, you got things like the fish processing plant in Anchorage that's been turned into a church, and other projects that AIDEA has been involved in throughout the state. It's not a bad idea to have a small investment bank to help spur development, but you don't. I mean, I think they've just gone way beyond that purpose. They're trying to be a bigger investment bank with the Anwar leases, with the Ambler Road, and with the field up on the North Slope with the Brooks Range field. They're trying to be a big investment bank that takes all this risk. The thing with Goldman and the other investment banks, though, is it's the partners taking the risk, right? I mean, it's their money on the line. They
have a fiduciary responsibility to themselves and to their investors. It's not like we just got all this free money laying around. Let's try it out.
Right. There's an incentive, an economic incentive for them to be careful. AIDEA has no economic incentive. It's certainly not the board members' money that they're playing with. And turns out, since the middle 2010s, when we've shifted over to PFD cuts as the marginal source, turns out it's middle and lower income Alaska families' money that they're playing around with. And they're treating it. They're not treating it with the respect, in my view, the respect and the care that they should. Certainly not the respect and care that Goldman and other major investment banks give to the investments they make.
All right, Brad, number 3's coming up. What is it? Let's hit it.
Number three is another way to look at oil tax credits. I wrote a column last week's a landmine column is about another way to look at oil tax credits, and I want to talk about that.
All right, Brad Keithley, Alaskans for Sustainable Budgets. We are continuing in number 3. Up next to the weekly top 3, we will be back with more of the Michael Duke Show. Common sense, liberty-based, free-thinking radio.
It's the Michael Dukes Show.
Why not take a quick break?
Be right back. Streaming live every weekday morning on Facebook Live and MichaelDukesShow.com.
Donna says, I wanted to try and sneak this in, but we just didn't have enough time. Donna says, I wanted to find it. Here it is. State-run so-called corporations have no accounting, no administrative requirements, and no accountability. I mean, this is the crux of the problem. Like I said, I mean, I ask about the track record of AIDEA because how many, okay, sure, they made it in one project, the Red Dog Mine project. They made it in one project. How many other dozens of projects have they poured? I mean, just this Mustang situation up there, well over $100 million invested. And what are they going to get out of it? 30 cents on the dollar, 40 cents on the dollar. That's not a return that we can live with. That's not, but this is what happens when you just write these guys a blank check and say, go play, go do your thing. Go see what you can do for Alaska. No accountability, no accounting, no administrative procedures. This is where we're at right now.
Yeah, Greg Erickson, an economist who understands the state very well, goes back as long as other economists, but back farther than other economists. Worked for the state for a while, understands state economics. Greg Erickson did an analysis of AIDEA, comparing the investments made by AIDEA to the investments made by the permanent fund, basically saying, look, if we hadn't spent this money through AIDEA, we'd spend it through the permanent fund, what would have been the result? And the result would have been that we would have had more permanent fund earnings that would have come back into the economy either through the POMV draw or come back into the economy through the PFD. We would have had more permanent fund earnings, more earnings for the state, more economic activity for the state if we would have invested that money in the permanent fund than with AIDEA. AIDEA's response to that is, yeah, but we produced more jobs and we produced more economic activity inside the state. Okay, but then you've just raised another question, AIDEA, which is, what would have been the jobs and what would have been the economic activity if you hadn't invested and suffered these losses? If that money went out through PFDs, because that's what we're cutting in order to give you money now. And there's been no analysis of that. I can take a guess at what the answer to that would be, but there's been no detailed analysis of that now. But AIDEA just always falls back on, yeah, we may not make money, and we may have these blown investments, and we may lose money for the state, but jobs, economic activity. Well, subsidized jobs and subsidized economic activity is not really how you want to run a state. I mean, that's how you ultimately run yourself into the ground. Ask Argentina.
Yeah, well, that's exactly it. Which leads to another question. Amy actually emailed me this question yesterday, and I was going to ask you it, but she's posted it in the chat room. And I know I kind of know the answer to this, but she says, will Alaska go bankrupt in the next 10 years? I mean, we have an $80 billion permanent fund, so I don't think technically we would go bankrupt, but the practices that we are doing right now could lead to something disastrous in the next 10 years. So you think, Brad, give me your take on that.
Alaska won't go bankrupt in the next 10 years. We may not have a permanent fund dividend in the next 10 years. The state may have to absorb that to continue spending and avoid taxing, top 20% for the cost of that spending. There may be various aspects of Alaska that changes, but I don't think it'll go bankrupt. The thing that really sort of the sleeping monster out there when you worry about things like that is the unfunded pension obligation. The unfunded pension obligation ultimately is backed up by the permanent fund corpus. Under the Constitution, the pension obligations of the state are constitutionally protected in a way that likely allows access to the permanent fund corpus to pay them off. So, and if the permanent fund corpus goes, we may be talking about bankruptcy. We're talking about a significantly different state. But that's not a 10-year problem. It's probably a 30-year problem. If you start layering on things like allowing doing what the Permanent Fund Board's suggesting and merging the earnings reserve and the corpus and allowing draws in excess of earnings from the corpus, if you do that, layer that onto the pension obligation, I mean, you can create, and if the economy turns south and oil prices go south and oil production goes south, you can create a scenario where, at the 25-year mark, 30-year mark, we could get to bankruptcy, but not the next 10 years.
Right. But definitely there's a lot of pain-driven stuff going on right now that nobody seems to be really acknowledging. And that's the problem here. All right. 30 seconds out. Ding. Brad Keithley is our guest, Alaskans for Sustainable Budgets. He'd rather talk about music and the music festival, but we gotta talk about all this tough stuff that's going on. It's just astonishing. Again, such short-sightedness. I don't care. I'm only here for another 4 more years, and then I'm out of here. I think a lot of people are feeling that way right now. All right, Brad Keithley, let's get to it. The Michael Duke Show, common sense, liberty-based, free-thinking radio. Here we go. Okay, we're back. Brad Keithley, Alaskans for Sustainable Budgets. One final segment, the weekly top 3. This is number 3. Another way to look at oil taxes. Brad, you've got charts and everything, which I have up here. So give me the rundown here, my friend.
All right. So about the same time I started focusing on the Alaska budget, I started focusing on the federal budget, just to better understand where we were, the place we were in, and the types of activities were going on, and how we could do a better job getting it under control. And one of the things that I got reminded of as I looked at the federal budget, and it reminded me, frankly, of a set of law school lectures that I had when I was back in law school, was the concept of tax expenditures. And the concept of tax expenditures is that Congress does direct spending, certainly a lot of direct spending, but they also do expending through the tax code, and they do that by creating these deductions or these exclusions or these exceptions in the tax code that essentially allow a category of taxpayers to pay less than the standard rate, than the market price slip would seem to indicate, allow them to pay selected beneficiaries to pay less than the going tax rate. And economists and lawyers call those tax expenditures because they look at them the same as spending, the same way as any other spending, except it's just happening by allowing reducing the tax code, reducing the tax rate, and allowing that money to stay in the pocket of the beneficiary, of the tax beneficiary, as opposed to directly giving the money out of the government fund. They're just reducing the government fund and allowing that money to stay in the first place in the hands of the taxpayers. And what some of the organizations that look at federal matters closely, Committee for a Responsible Federal Budget, the Concord Coalition, the Pete Peterson Foundation, what those groups do is look at tax expenditures as spending and line them up as spending and say, look, do we really need to be doing this tax expenditure? Is it a better use of taxpayer money, taxpayer spending, than some of the other things, or alternately, could we reduce the tax expenditures and improve the revenue that's coming in to offset spending levels? When you think out of it in Alaska terms, they sort of put the tax expenditures in the swoop chart. Those who follow the legislature closely knows that there's a chart that legislative finance does called the swoop chart that shows the highest spending agencies down to the lowest spending agencies. That's why it gets the name the swoop chart. And it enables the legislature to have a view of where most of the spending is going, what spending is going in the various categories, and sort of helps target where potential savings might be. So what these federal watchdogs do is they take tax expenditures and put them in sort of the federal equivalent of the swoop chart and say, look, Congress may not tell you that we're spending all this money. For example, on the employee health exclusion benefit exclusion from the tax code, Congress may not tell you that we're spending all this money, but in fact, when you look at the swoop chart, when we put the tax expenditures in, you can see that that's one of the biggest categories of spending. Overall, tax expenditures at the federal level are over $1 trillion. They're about the size of the deficit. If you wiped out all the tax expenditures, you'd have a balanced budget. So I took that concept in this last Friday's column in Landmine. I took that concept and applied it to Alaska and asked, do we have tax expenditures here, and what size are they, and how would they fit in the swoop chart? And the answer is yes, we do have tax expenditures. We call them indirect expenditures as opposed to tax expenditures. But we do in fact have them, and we do in fact keep track of them as a result of legislation that Steve Thompson introduced in the early 2010s. One of the positive things that Steve Thompson did, and so we keep track of them. And there's a report done annually by the department, semi-annually, biannually, every 2 years by the Department of Revenue of what those tax expenditures are. And then there's an analysis done every year by Legislative Finance Division of a portion of those tax expenditures to see if they fit the purpose of the legislation and if they're good uses of the public funds. The biggest tax expenditure are the credits, the per barrel credits to oil. They're about 80% of the overall tax expenditures. If you put them in the swoop chart, so I said, okay, I've identified we have tax expenditures. I've identified where they are. Let's put them in the swoop chart. If you put tax expenditures in the swoop chart, tax expenditures would be the third largest spending category, behind only K through 12 and Department of Health and Human Services. It would dwarf every other spending category in the budget. And of those tax expenditures, as I said, about 80% of that is the per barrel tax credits. If you strip those out and just put those standing alone in the swoop chart, they would be the third largest. Standing alone, they'd be the third largest category of spending in state government. So just like happens at the federal level, when you start questioning tax expenditures, compare them to spending or compare them to, could we save there? Just like we talk about saving on K through 12, or we talk about saving on university spending, or we talk about saving on health and social services spending. Could we save there, reduce the expenditures there, and reduce the deficit in the budget? And that's a question that's not been asked. But by viewing them as a tax expenditure, we raise that question. I will say this: the tax expenditures have been subject, are calculated biannually by DOR, so you know the amount that they are. They are reviewed by Legislative Finance Division for whether they achieve the legislative purpose and whether the Legislative Finance Division recommends they be continued or terminated or reconsidered or some categorization. The last time Legislative Finance Division looked at the per barrel tax credits, they said they were not able to determine, it was indeterminate whether those credits were achieving the legislative purpose. The purpose at the time the credits were adopted was to incentivize additional production. Legislative Finance said they could not tell whether in fact those credits were incentivizing additional production, achieving the legislative purpose. And when Legislative Finance commented on whether they ought to be renewed, terminated, reconsidered, the classification that Legislative Finance put them in was reconsideration. Legislature hasn't done that. That analysis was 2 years ago, 3 years ago, by Legislative Finance Division that they could not determine if they were achieving the purpose and recommended redeterminate or reevaluation. The legislature hasn't done that. So I think we like at the federal level, we really ought to be starting to look at these tax expenditures at the state level. as another category of spending, allowing some people off the hook for legislative purposes, off the tax hook for legislative purposes. We ought to be looking at them as spending and comparing them to other spending. Natasha wanted to do that with PFDs. She wanted to consider them spending and compare them to other spending. Right. So why shouldn't we do that with tax expenditures as well?
And you don't have the swoop chart on your post on this, but you do have the one chart about expenditures, and you could see in this chart that basically it equals the deficit in many ways here. And it surpasses the deficit and then equals the deficit. You could see those 17, 18, 19, that's after the major tax credits, per barrel tax credits were finally put to bed. But you could see that it was reigning supreme there for quite a while.
Yeah, when you measure, I mean, one of the ways to measure tax expenditures at the federal level is compare them to the deficit. As I said, if you close tax expenditures at the federal level, you would wipe out the deficit. They're that large. So I thought, okay, I'll do that. I'll do that from the state standpoint as well. On that chart in the blue is the size of the deficit per year, which I calculate as being the size that they took out of the size of the PFD cut that they diverted over to balance the budget. So that's the size of the deficit that's in blue. The size of the tax expenditures, which again are largely driven by the per barrel credits, the size of the tax expenditures are in red. And in every year except the last, this is from the data that Legislative Finance and Department of Revenue had. So it cuts off at 2021 as their latest data does. But in every year except the last, the size of the tax expenditure is outstripped the size of the deficit, and averaged over that period, over the 5 years of that period, tax expenditure has outstripped the size of the deficit. That means, like at the federal level, if we eliminated the tax expenditures, then the deficit would go away. I'm not suggesting that we eliminate all the tax expenditures, but we at least ought to. I mean, if they're of that size, like spending that we now analyze on a year-to-year basis and decide whether or not we have enough money to spend. Like spending, we ought to be analyzing the tax expenditures.
Should be part of the discussion. Absolutely. Brad Keithley, Alaskans for Sustainable Budgets. We're out of time. Thank you so much, my friend. I appreciate you coming on board.
Thank you, Michael.
Folks, out of time. Hour 2 dead ahead. The Michael Duke Show. Yeah, I mean, when you look at that chart, Brad, you're like, wow. You're like, okay, so all this deficit spending, all those per barrel tax credits, everything else, that's essentially where the majority of the spend for the PFD came from, or went to, was in all those things. And in some cases, except we would have had a surplus if we had not given the full per barrel tax and the credit program and everything else. It's just shocking. Again, all this ideas with other people's money, whether it was AIDEA, whether it's the oil tax credits, whether it's the permanent fund, it's all this other people's money. We know what to do with this. You guys just shut up and sit down. We know what to do with this. This is insane.
And again, Michael, I know I hammer on this point too much for some in the audience, but again, it's other people's money other than the top 20%. It's middle and lower income Alaska families. The top 20% is deciding how to spend middle and lower income Alaska families' money, and they don't have to spend any of their own. Per barrel credits, yeah, that's fine. Yeah, oil companies, yeah. Let's give that money to you. Oh, it's not our money that we're giving to you, but yeah, we'll give you that money.
We'll do that for sure. James asked an interesting question here. He says, how does the overall tax structure compare for an oil company in Alaska versus an oil company operating in the Permian? Well, I mean, first of all, the Permian is all privately owned land, right? I mean, that's a whole different deal. Brad?
Well, I get asked that question a lot, and that's really not a fair analysis. I mean, you really have to look at overall costs and margins and what the tax is of the margin of the oil companies, the margin revenues above spending, margin of the oil companies in these different places. You can't really look at it in in that sort of geographic way. I would say that the tax on Alaska, when it was designed in 2013, was designed to bring up additional investment. And it had the effect of doing that. And that additional investment has resulted in additional production. We were on a steep decline curve in 2013. We weren't getting anywhere near a proportionate share of the investment dollars that were flowing into the industry at the time. The tax system was designed to increase the margins in a way that brought additional investment into Alaska, and we achieved that. The problem is we've not looked at it since. We've not looked at it for the last 10 years. I mean, legislators will say, oh yeah, we sort of looked at that, but they really haven't on a basis that on looking at it from the standpoint of, is this necessary to maintain investment? Is the amount of investment we're maintaining, is that a good thing, or is it worth the cost in terms of PFD cuts and other things, or not? And I think the economics of the industry overall has shifted over that time. And frankly, I don't think I wrote a column on this at one point. I don't think that the amount that we're giving the oil companies in terms of the tax credits is needed to maintain the level of investment that we have. I think if you look at it in terms of what would it be the impact on investment, what would be the impact on production if we increase the tax credits by an additional or decrease the tax credits by an additional $5 a barrel, I think you would see that the impact on production wouldn't be much. And in fact, DOR's, this is before Adam Crum, but DOR's last public look at what the impact of changing the per barrel tax credits would have. DOR's last public look said there wouldn't be any impact on production, that you could drop the tax credits by $4 to $5 and you wouldn't have any impact on investment levels or on production.
Right.
So I think it's past time to take another look at that and look at the per barrel tax credits. I don't think it's helpful to look at it compared to the Permian or compared to North Dakota or compared to the UK or compared to Abu Dhabi or compared to Saudi or compared to any place, or Indonesia or Nigeria or Angola. I don't think it's really useful to do that. You have to look at what the impact is on Alaska margins, given Alaska costs, given Alaska timeframes, given the Alaska situation. You have to look what the impact is on margins and see whether that detracts or adds to investment and what the cost is of that impact.
The irony, of course, is that if we eliminated the per barrel tax, we'd getting more money from the oil companies. There you go, Harold. There you go. We get more money from the oil companies. It's something we should be doing. Just another thing that we could be talking about. Brad, less than a minute here. Final thoughts for today.
Final thoughts for today is I think the Permanent Fund Board is going way the hell overboard. And I think we ought to start giving serious consideration to, as we did with the Utilities Commission in the late 1990s when we sunset the Alaska Public Utilities Commission and created the Regulatory Commission of Alaska, just started all over and created a new board. I think we need to be considering doing that with the Permanent Fund Board, and I'm going to be talking more and more and writing about that more and more. This proposal is just outrageous.
And AIDEA. I mean, let's just go ahead and start talking about whether we should shutter that operation as well. $100 million. All right, Brad. Well, I appreciate you coming on board. I hope you enjoy the days. Are you there for a little bit longer? Is there a festival going on right now?
This is my last day. I leave tomorrow. I head out tomorrow. So I'm looking out at the wonderful scenery for the last time, and I'm going to visit a few friends and then shut it down and head for the airport.
Bittersweet, my friend. Bittersweet. Well, I appreciate you coming on board. Thanks for being part of it today.
Michael, as always, thanks for having me. I look forward to the discussions.
You bet. Thanks so much for coming on board. All right, Brad Keithley, our guest, Alaskans for Sustainable Budgets. All right, we're getting ready to go to it. Here we go. The Michael Duke Show. Hour 2 dead ahead. I'm going to recap a little bit some of this and rehash and talk a bit with you about it. And we'll see what your thoughts are as well. Back with more of the Michael Duke Show, Common Sense Radio.
Daddy, put that thing back in its holster. We haven't gone anywhere.
I don't understand.
Check out the MichaelDukesShow.com for information on how to get access to the podcast.
Welcome to the party, pal.
The Michael Dukes Show.
The greed and the entitlement is astounding to me.
What more could you want from a low-budget radio program?
This is a dumpster fire.
That was just BS.
It is time to get a new perspective.
We know just what you need, and we've got just the cure. Open wide and prepare for a steaming hot cup of freedom.
I just don't fathom it.
The Michael Dukes Show, streaming live across the world.
Live around the world on the internet at michaeldukeshow.com and across the state of Alaska on this your favorite radio station and or FM translator. Hello, good morning. Welcome to the program. Hour 2 of this Tuesday edition of the show. And if you're just finishing up, or just joining us rather, we just finished up with Brad Keithley from Alaskans for Sustainable Budgets in the weekly top 3. And if you missed that, you can go back and listen to it on the podcast, which is available wherever you find great podcasts, including Spotify and iTunes and all that kind of stuff. And we are ready to we're ready to go to kind of recap some of those things and talk about it. But you can go back and listen to it or watch it, I guess, on the replay on YouTube or Facebook or wherever. So lots of good stuff happening here. Okay. So I just Brad had a lot. I'm trying to unpack everything that Brad had laid out there. One, of course, was the discussion about the Permanent Fund Board and their decision to get involved in this, and what I would consider to be their collusive nature, I guess, with the crisis that's been manufactured by the legislature, by Bert Stedman and company in the legislature, in with the permanent fund corpus and the permanent fund earnings reserve and everything else in between. It is it's astonishing. It really is that we have got a situation where they have become so desperate for money and to keep the level of spend at the current level that they are willing to sacrifice Alaska's future to make sure that in the short term they can spend at the level that they want to continue to spend. That's essentially what's going on. If by some chance they were able to put together a constitutional amendment to combine the earnings reserve account and the corpus of the fund and create a POMV path to draw directly from the corpus for future generations, and even if it was at the 5% that they're getting now, or that that they want now, the overall effect of that would be, the real rate of return could go up and down in the fund, but overall, that 4.5%, of what they've consistently been bringing in is not going to be enough. If they continue to take 0.5% more than what the real rate of return is on that fund over the years, in 20 years, you've got a real problem because you've now drawn down the corpus of the fund to the point to where it's diminishing returns, right? You continue to draw more of what's available to invest, and those returns therefore get smaller, and you continue to take more of what the smaller investments return, and the next thing you know, you're at a fixed point of where you just can't continue to spend at the level that you're spending. Now, remembering, of course, that each and every year that the state budget continues to rise, regardless of anything that happens in the legislature, the baked-in increases in the budget will go up $100 to $150 million every year. So in a 10-year period, you'll have an increase of $1 billion to $1.5 billion in the budget in 10 years. If nothing else changes, if there is no increase in programs, nothing else, we just set it on autopilot and walked away, it would be $1 billion to $1.5 billion more than what it is today. Now, you can see with what Brad is saying here that the top 20% do not want to have to face any kind of taxation now. It may be inevitable in the future. You and I have kind of, I've discussed this. I believe that it's inevitable in the future that Alaskans will be faced with a tax at some point based strictly on the amount of spending and the spending habits and the philosophy of those who have been in the legislature. And it's eventually going to reach that tipping point to where there will just not be enough of money available. I mean, like Brad said, they've already gone through the savings. They burned through all the savings. They've now burned through the majority of the permanent fund. I mean, we're getting a whopping 25%, right? Although that could be next year, it could be totally different, could be less. Eventually, the permanent fund itself will be gone, and they're already looking at the next big pot of money, which is the corpus of the fund. And you would think that as they look at this and they see what's going on and they see the fact that we're struggling every year to fully fund all these different things, you would think that at one point they would say, well, maybe we need to ratchet back the spending a little bit to try and prevent this train from going off the tracks. But instead, what are they doing? Oh, we need more. We need $1 billion for education. Oh, now we're talking about a defined benefits program, which I want to say, was it $1.2 billion or $1.4 billion was the fiscal note on that in the long term? Not to mention the fact of what it sets up, and now it would continue to grow our unfunded liability for defined benefits participants, right? And remember, this would be retroactive to many people. So what is the initial cost? I mean, we just don't even know. It's going to be $1 billion. Okay. Let's just round it down and make it easy. $1 billion. Okay. So we're already got, we want to spend more on education. We want to spend more on defined benefits. We want to spend more on this program and more on that program. There is no slowing up the appetite for spending. And let's just say hypothetically, people in the chat room like Harold and stuff have gone on. If we only had just been taking all of our oil and getting more money for our oil and fixed our oil taxes. Well, what would have happened? They would have spent every dollar there they could as well. Because that is their nature. I mean, this reminds me of the frog and the scorpion, right? Crossing the river. The old story about the frog giving the scorpion the piggyback ride. Don't sting me, okay? Yeah, no. They get in the middle, he stings him. Why did you do that? Well, it's in my nature. I mean, that's just, it is what it is. And you've got legislators who have been there for years, decades in some cases, who believe that they, in their heart of hearts, that they know better than you how to do this. Or maybe they're building up for some kind of long-term retirement. And Gary Stevens' push to get this legislative raise, the salary raise, was so, to me anyway, maybe not to you, but to me, was such a blatant grab at the end. Because again, he's on his way out. He's already said it. He's not gonna run again. He's not gonna do that. He wanted to get those last few years at the retirement level of making sure that he bolstered his salary because the salary, the 20 years ago when he got started, right, and got vested in the system, his retirement is based on what? His top 3 years, 80% of his top 3 years. So if he can get 2 or 3 years in there at $120,000 a year, well, the base is 80 something thousand now. So again, he's going to get 80. But if he can get a couple of years of that in there, a couple, 3 years, all of a sudden, sure, his retirement, he can pull in, $60,000 a year. in retirement on top of everything else he's doing. And ready to go. I mean, he's already got his house in Hawaii. He's already, spends most of his time over there, does all that. So I saw the same thing in Fairbanks years ago. I remember it was Hank Hove or somebody that was in the legislature doing these things. And the commentary that came down to me through the grapevine was he didn't care. He's retiring. He's going out. He's moving out of state next year. He just wants to make it good for whoever he's. This is the problem, folks. And then the whole AIDEA thing. You've got people who are getting paid handsomely, I might add. People who are getting paid in an agency or a state corporation like AIDEA who are just out there playing with people's. It's like playing Monopoly. It's not their money. Doesn't really mean anything to them. They're going to take a guess. Every now and then a gamble pays off like the Red Dog Mine Road, but every other time they're losing money to the tune of, in this thing with Mustang, as Brad pointed out, they're into that for $100 million plus. And what are they going to get back out of it? Something, but is it going to be the same? And where's that money coming from? Well, it's coming from you. And again, the marginal spending is all being funded by permanent fund cuts at this point. So we've got a whole group of folks who essentially have no accountability. They have no long-term vision. And in the long run, they really don't care about what this does because, for the most part, many of them are probably going to wander off in the pucker brush when it's all said and done. And we were talking about Liz Vasquez yesterday, right? Liz Vasquez, not Liz Vasquez, I apologize. Liz Schneider, right? Who was, she moves up, she goes into the legislature, she does this move and or shake it thing, she tries to do it. 2 years later, she moves back to Florida. Do they really care about what's going on? Right? It's insane. But this is what we're living with right now. This is the reality that we are in. And until we, as a people, start holding our legislators and more accountable for this kind of stuff and start calling them out on the pooshwa that's going on, the pooshwa.
That was just BS.
Yeah, that stuff. And until we start calling them out on that, this is what we're going to get. And again, the reporting is not doing us any favors on this. This thing with James now I know that James is liberal, right? I know that that's his slant. I knew that from the very beginning. But he usually would get something, he'd usually have something to redeem his stories. He writes very well overall. But this story in the ADN, which was a reprint from the Alaska Beacon, talking about the Permanent Fund Board and this push for this constitutional amendment and all this stuff, that is insane. There is no mention of the monies that have been transferred from the earnings reserve, going on and on about how the sky is falling and the earnings reserve is going to be bad. There's not going to be enough money in it, using the false numbers that they said where they account for the revenue for 1 year, but then they include future expenditures in future years without including those revenues, which of course is exactly the same thing that Bill Walker did when he was trying to justify taking the permanent fund. Oh, look at how much money is in here, and look at how much we're going to have to take and spend. And in the future, there's not going to be there, except for you didn't account for the future deposits that were going to be in there either. It's all bull. And then James had the audacity to write about New Mexico putting away $8 billion into their various permanent funds to protect for the future and acting like we didn't, when we put exactly the same amount of money into the corpus of the fund from the earnings reserve, which Bert Stedman, cunning like a fox, did as a way to exacerbate and create this crisis. I mean, and what do? This is way deep in the weeds for most people. They have no idea that this is the stuff that's going on. There's no reporting on it other than maybe, a show like this or some other radio show or some blog post or some, a more obscure article that most people don't read or show that people don't listen to. They get their stories from the mainstream media and they read James Brooks and they start wringing their hands and they just, well, do whatever you got to do to save us. Because people, they're not paying attention. It's depressing that they're just not paying attention. They're getting sold a bill of goods and they're lapping it up like mother's milk. All right, we got another segment coming up. Then Chris Story is going to be up. The Michael Duke Show. Common sense, liberty-based, free-thinking radio.
Listened to by more staffers in Juneau than any other show, because their bosses told them to. And after what they just heard, oh man, they're going to be pissed.
You're a bad, bad man.
The Michael Duke Show.
I think I depressed myself on that one. I'm just so agitated by this whole thing. And I'm just thinking, I should have gotten a job in government. That's what I should have done. I should have just shut up and gotten along to get along and just gotten a job in government and, fleeced the golden fleece as long as I could and then jumped out with my golden parachute and done all that. That's what I should have just done. Should have just done that. Didn't. But I should have. If you get a chance, just send your kids out. At this point, it's like living off. You should just live off the enemy supply lines until the whole thing collapses. That's what you should do. Man, not paying attention, uninformed, flat out don't care, says Denise. That's true. Not paying attention. This is the majority of people in this state. You talk to some people in the state about, you show them the last 15 minutes of the show and they'd look puzzled because they don't even understand that, what is, what's going on. Randy says, James Brooks mentioned about the subject of transfers from the earnings to the corpus for the purpose of inflation proofing 9 times. Okay, you're missing the point, Randy. That's not what I'm talking about. Yes, he talked about the inflation proofing, but he didn't talk about the additional $8 billion that was transferred there. Although he did bring up New Mexico transferring $8 billion, and maybe we should learn from them. Again, totally ignoring the fact that we had additional transfers of above and beyond the inflation proofing of $8 billion. By the way, why do we even need to have inflation proofing? Because the POMV is supposed to automatically inflation proof. Chris has got it right. Should have been a tier 1 employee. You're right. I should have. I should have gone to work for the state at 20 years old, been a tier 1 employee, worked my 20, retired, went back to work to double dip, and then, retired again at 50. I could be free and clear right now, making a healthy income, but I didn't because I was philosophically opposed. Damn those principles. Damn it. That's what are you going to do? What are you going to do? I'm watching this, I've used this analogy many times, but it just feels like I'm in the cab of the locomotive and I can see the bridges out, but I don't have any hands on the controls. All I can do is scream at them to grab the brakes and to stop shoveling coal into the firebox, right? And that's all they're doing. They're just shoveling coal into the firebox and turning the throttle up and hand me their beer and say, here, hold this. It's going to be spectacular. And I could see that the bridge is out, and all I could do is scream into the wind that the bridge is out. Or I could have been a consultant, says Herder. Maybe I should have started an Alaska study industry company or something. I could study the study that studied the previous study. I mean, hell, with AI, I could have just dumped all those studies into an AI and said, spit me out something new, and gotten paid $500,000 for it. But that's what I feel like, right? I feel like I'm in the cab of the locomotive watching all this unfold and just being like, it's like a nightmare, right? I'm naked in my underwear screaming at these guys to please stop. And then I'm going to have to take a test afterwards. That's what's going to happen. And these guys are just like shoveling the coal in, cracking the throttle open a little bit wider. It's going to be fun. Don't worry. We'll make it. It'll be spectacular. Here, hold my beer. I mean, that's all I can see right now. Can I post the Brooks article? Hey, sure, I'd love to post that Brooks article. Let me post that for you, Willie, so you can take a look at that and you could see exactly what I'm talking about. All right, here we go. We're jumping back into it. The Michael Duke Show. Common sense, liberty-based, free thinking radio. Like, share, follow, do all the stuff. I was going to take some calls, but I'm not going to do that because I'm pissed. Back with more. Here we go. Okay, welcome back. The Michael Duke Show, common sense, liberty-based, free thinking radio. I was going to take some calls, but I can't do it. I'm fixing to yell at somebody, and I just don't want to yell at you guys. That's not a good way to do things. I caught this article, and I'm going to talk about it a little bit. Now, I'd be the first one to say when I first heard about this, I was like, what's going on? I'm like, what's happening here? When the Matsu Borough School Board voted last month to restrict the ability of the sole student representative to participate in public meetings, I was like, well, I mean, I don't understand. Not that, again, student participation is, well, I mean, it's a good thing, okay? I mean, I want students to participate and to understand and do things like that. But again, we're adults making adult decisions for the kids because they don't have the ability and the life experience to a lot of times make the best decisions, right? We all can probably acknowledge that. So I was looking at this and I thought, well, why did they do that? What was going on there? I got a couple emails from people who basically said, I just didn't understand what was going on, which is very possible that I did not understand what was going on. Nor did I really care, quite honestly, in the long run. I mean, again, remember, my kids are not in school and have never been to public school. And so what the school board does, I find infuriating sometimes and wrong. But for the most part, I'm just like, meh, okay. I mean, you guys do it. Again, remember my whole commentary about how if I was going to fight over the school systems, I'd definitely take my kids off the battlefield before I went to battle, right? And that's what I did. So so somebody said, well, you're wrong because they did it for a specific reason. And I'm like, okay, well, again, I'm not against, first of all, I think, students participating is a good thing in one way, but at the same time, they shouldn't be like voting or swaying a vote or anything like that. If they want to have their comment period or do whatever, that's fine. Do they need to sit on the podium? I mean, I'm again ambivalent to it, one way or the other. But I found this interesting. It's an article out of the ADN by Amy Bouchatz, which you can find again at adn.com if you want to go over there and take a look at it. Students and staff at two Matsu high schools say they were questioned by administrators as part of a district-level investigation into a student-led protest at a contentious early September school board meeting. The protest was centered on a school board vote last month to restrict the ability of a sole student representative to participate in the public meetings. The investigation sought to reveal whether teachers had violated a Matsu Borough School District policy banning them from participating in activism at school or politically influencing students. It involved more than 24 students who described being individually questioned by school administrators, as well as at least three teachers, according to interviews with students and staff. No inappropriate actions by staff were uncovered during the investigation, according to the statement provided by the spokesperson. The district statement said that the members of the school board requested the inquiry, but no additional information was provided. Students interviewed for this story said the investigation began a few days after a September 6th school board meeting, where the board voted 5-2 to dramatically limit the role of the board's student representative. About 10 students spoke in protest of the policy change, while dozens of others attended in protest, dressed in yellow, Stand for Student signs taped to their foreheads. An estimated 30 students at both Wasilla High and Matsu Career and Tech School were pulled from class or called between periods by school administration staff on the days of September 8th and 11th. They were asked whether any teacher directed or encouraged them to protest, and whether instructional time or school supplies were used to create protest materials such as signage. At least 3 teachers who served as student government advisors, 2 at Career and Tech and 1 at Wasilla, were also directly questioned about their influence and any school-funded support. But protesting the meeting was entirely the students' idea. People interviewed for the story told the ADN. So I found this interesting to see, was there a little activism going on in the school? Were the teachers encouraging these kids to go strike? Or protest? Were the teachers encouraging these students to go do these things? This is at the heart of this investigation. And I find that interesting. I just find that wholly interesting that they even considered that this is a possibility. And again, if I have a suspicion, if I was you and I had students in these schools and I had a suspicion that this was taking place, that these teachers were basically proselytizing my children to go out there and become student advocates, instead of teaching them history and the basics of reading, writing, arithmetic, and doing all this other stuff, but again was encouraging them to activism, I think I would start asking questions about maybe this is not the best thing for my students. I just think maybe that is not the best idea for those kids to go on and do that. It goes on to talk about the change in the board policy. Until September, the student representative, designated a board member by district policy, regularly sat on the dais while other members during meetings with other members, and was permitted to fully participate in all but executive session, to include questioning witnesses or testifiers. That was slowly, and this goes back to the library review panel and all different kinds of stuff. But this whole thing is that when they are looking into the fact that teachers and students are being questioned as to whether or not the teachers are, I was going to say radicalizing. That's really not the right word. Proselytizing, I guess, is still the proper word on that. To see if they are encouraging these kids to go out and to protest and strike and things like that. That's a little worrying to me. Now, this is the Matsu, okay? Probably the reddest district in the state. And when you got questions like this going on, and this points to one thing to me. This points to one thing: how important this upcoming election in the Matsu is, especially for school board. And as we pointed out, is it yesterday? Yeah, because today's Tuesday, so of course it was yesterday. We pointed out yesterday The fact that Ole Larson is being outraised 3-1 by his opponent, who is, playing the darling of, and playing dumb as to the fact that she's a former NEA president and everything else, and trying to sound very conservative in this district. In everything that she talks about, she's trying to sound very, very conservative, this Diana Scheib. Except for the fact that, of course, she's a former NEA president. She's got Margot Bellamy as a financial contributor. The Pat Chesbrough, the Democratic U.S. Senate candidate, is her deputy treasurer. I mean, except for all those things, she sounds like the perfect candidate, right? What I'm saying is that these races, it happened in Fairbanks. They got totally rolled. In the Mat-Su, these races matter. This is important stuff. And when you see stuff like what's happening at these schools, with whether or not the teachers are proselytizing or encouraging these kids to strike, whether there's even an investigation into that's what's going on, that would raise my eyebrows bigly, for sure. And it proves nothing more to me than the fact that these races coming up on the 7th of November are going to be very, very important. And we should be paying, and again, it goes back to what I've said and been saying for the last 10 years. Stop paying attention to all the stuff that's happening at the national level and all this other kind of crap. Who cares who's the next Speaker of the House at this point? You have no control over it. Does it really matter? It's like watching paint dry. Pay attention to what's happening in your local communities, what's happening on your school boards, what's happening in your city councils, what's happening in your road service areas, what's happening at your borough assemblies. That's the stuff that's going to affect you every day. I don't care if Jimmy Jam Jims is the next whoever, or Scalise or whoever else they're putting up. I don't care. Because, again, I have no control over it. I can help here at the local level. That's where we need to be paying attention to it. In my humble opinion. Or not so humble opinion at this point. All right. Chris Story is up next. He's going to be our guest. We're going to continue this, The Michael Duke Show. Common sense, liberty-based, free-thinking radio. Back with more right after this. Don't go anywhere.
We're broadcasting live through a series of tubes.
Allowing all of these entities to provide streaming stuff going on the internet.
Well, it's kind of hard to explain. Sorry. Streaming live every weekday morning on Facebook Live and MichaelDukesShow.com.
Okay. Trying not to lose my chill here at this point. I need this final segment with Chris Story because I need to not lose my chill here. All right. Denise says they absolutely encouraged the teachers the students to strike, but they all said no, of course not, because they're protecting those teachers, right? Terry says, you can bet your last dollar that teachers encourage students. There are too many liberal teachers teaching their own ideology. Denise says, my son had to call twice and tell the principal to tell the science teacher to teach science and stop degrading the current POTUS. I mean, our districts are more worried about candy, literal candy, than other stuff. A memo was just put out basically saying no candy ever. It's only fixing the problem. Here's what Brian says. Fixing the problems at the most local level first will go a long way to fixing the problems at the state. I mean, it's a trickle up. It really is. It's a grassroots trickle up. It doesn't matter who's a speaker. Doesn't matter who's, none of that stuff matters, because once they've been placed in office, you have no control over anything. I mean, sure, you can call your congressman's office or whatever and have your say, but that's it. You can't control you have no influence over who's going to be the next Speaker of the House. And at this point, why waste? I'm not wasting any energy worrying about it. I don't even care. It just literally could give two on it. I just don't even care. So, Melissa Burnett, school board member in Fairbanks, says yesterday's Newsminer article, Bobby Burgess' first order of business is to bring back the sex ed addendum that we got rid of in June. It's so important to pay attention locally. Yeah. So they voted again. Melissa, the first thing I do is ask the attorney, is this dilatory? Because anything that's just been decided recently, usually within 6 to 8 months, can be considered dilatory because the body has already decided on it. So I'd be asking the attorney, is this motion dilatory? That'd be the first thing that I'd be asking. Yeah, Brian says, call your congressman, call and they'll make placating noises, but in the end, they really don't give a rip. No, they're there for life, essentially. I mean, that's essentially what they're saying here, is that they're there for life. That's what it's all about. They're in it until somebody drags them out by the knuckles. All right, here we go.
Good morning, Michael.
Hello, sir. How are you?
Fantastic. So good to hear your voice.
Yeah. Okay.
I practiced that several times so I wouldn't laugh when I
know. It's kind of hard, isn't it? Lift me up, Buttercup. That's what I need you to do today. What's our topic for this morning, Mr.
The law
Sensei?
The law of economics.
The law of economics. Okay.
Mm-hmm.
All right. Good. How was your week? How are things going? Give me some good news. Give me something to smile about. What's happening?
Well, we're only 2 days into the week. That should give you something to smile about. You have several more days before Friday, so that should give all of us who love what we do a big cheer and lift up as we start this wonderful Tuesday in the dark, right?
I hate you so much right now.
Oh, Michael.
In a loving Christian way, I hate you so much right now.
Right. Oh, I feel your hatred.
Gives me a warm
and I'll raise
fuzzy.
You. I see your hatred and raise you one iota of care and compassion.
Oh, man, Chris, sometimes, this whole world, it's madness, man. It is just total madness. And you're like, I mean, you feel like, am I the only one who sees this? Am I the only one that sees the madness? Because I'm just, and then you're like, I don't know. So you just got to throw your hands up in the air.
Sometimes, did you ever watch Modern Family very often?
No, I'm not a sitcom guy.
Jay Pritchett goes to his wife's or one of his employees' quinceañeras, and his wife kind of pushes him to, and so he pretends he knows everybody, and he thinks it's a quinceañera, but that's across the hall. He's actually at a wedding. Mexican wedding, and he sees the bride and groom dancing, who he thinks is the father-daughter dance, and he sees the groom put his hand on sort of the lower back and just upper rump of the bride. He thinks it's the daughter. He goes, am I the only one seeing this? And he starts freaking out. And again, he was just looking at the wrong thing. So It's about perception. And where are you standing? Are you in the right quinceañera, Michael?
Yeah, maybe I'm not in the right quinceañera. Maybe I'm getting married all over again. I don't know. It's crazy. All right. So the law of economics. That's what we're talking about. Okay.
Yes, sir.
All right. Brian, hold on, Chris. Brian says he just posted in other news the Reason article on Americans don't like much. I read that article yesterday. I thought about having JD on to talk about it. Oh, man. All right, here we go. Sorry, the Michael Duke Show. All right. Chris Story, the man from Homer. I told him I really needed him to lift me up today. And then he said I was too heavy, which was really offensive and hurt my feelings. It hurt my feelings. Chris Story, hello, my friend. What be the haps? What What do you got going on? What today you want to talk about the law of attraction? No, the law of economics. That's what it was. Something similar to that. What's on your mind,
Yeah,
my friend?
believe it or not, those are actually interchangeable. Yeah. The law of economics, just thinking about our capitalist society, and I wouldn't want to live in any other kind of society. And essentially, if you misunderstand, or if somebody in your life misunderstands what is capitalism because they confused it with crony capitalism or monopolistic capitalism or quasi governmental capitalism, things like this. Capitalism is essentially a belief system that says the capital, the money, belongs to the people who earned it. Period. That's it. The communism and socialism believes that the money is better spent and handled by the government.
Wait. Wait. Old BO told me that I didn't earn that I didn't build that. I didn't earn that. That was other people. That's what he told me.
Yes. There's a lot of smart people. Let me tell you something. There's a lot of smart people out there. You're not that smart. No, but the law of economics cannot be denied. It's a law such that you could prove it by saying, I don't know how I could demonstrate the law of economics to you as quickly as I could demonstrate the law of gravity. You can violate the law of gravity by jumping off of a building and you pay the price. The law of economics is just as real. However, it's not as obvious. So if I could break it down, the law of economics, and I didn't invent this, I'm just sharing it with you. This is from the beginning of time. However, it was codified in the early part of the 1900s by Napoleon Hill as you cannot get without giving. The law of economics states, again, just very quickly, you cannot get without giving. And maybe the corollary or a follow-up law would be the law of reciprocity, meaning you cannot give without getting. You give anyway. You don't necessarily show up to give charitably because you know you're going to get something, but you give anyway, and you can't help but receive. Emerson called this a law of compensation. No one can do without getting. Do for others, you get for yourself. It's a law. It happens whether you like it or not, whether you acknowledge it or not, whether or not it's as obvious as dropping an apple from a tree and hitting Newton on the head. It's a law nonetheless. And Napoleon Hill mapped out a way to implement this, which I know you're going to ask me, so I'm preemptively giving you the way. But it's not just a way to more money. You're welcome. It's not just a way to more money. It's a way to riches, health, prosperity, which means, as Buckminster Fuller said, the amount of wealth you have going forward without working for it, a meaning in your life or purpose or a passion for living, and loving that it's Tuesday, not Friday, if you love what you do, and relationships, deeper, better, longer lasting relationships, all these kinds of things. So here's the implementation. It's simple. Select what you want for you. Make sure that it's yours, not that which is put upon you by family or well-intending friends or people in your social circle. Select what you want individually. Create your plan for getting what you want, which, remember, means also giving. There is no getting without giving. There's no giving without getting. And then put the plan in action. And the cork in this wonderful bottle of champagne that we're creating here is persistence. And that creates a lot of questions, and persistence creates a lot of problems in the world. In this idea of the law of economics or reciprocity, persistence can be mislabeled in a lot of ways. But just to repeat, select what you want, create your own plan, put the plan into the action now, like not tomorrow, but today, and then follow through and have persistence. So let's dive into persistence a little bit. But I think this is such an elegant, beautiful, simplified way to look at the world that gets morphed and twisted through governmental means and all kinds of organizations, organized labor, and everything, all well-intentioned, but it mislabels what is capitalism and what is the law of economics. It simply states you cannot get without giving.
Well, and I think you highlighted it earlier when you said not to be confused with crony capitalism, which is what I think a lot of news shows and talking heads and everything else, they lump that all in together. It's the difference between capitalism and the free market, right? I mean, a true free market, a true capitalistic issue is definitely not one where they go hand in hand to the government, say, give us all your money for your contracts and tax all these people to make it happen. That's the problem. But again, even the capitalistic system we have today has done more to lift more people out of poverty than any other thing in the history of the world. So, I mean, however you want to do it, it's still important to know what the true definition is.
Exactly. And I played the Bono clip pretty regularly on my show, just as a reminder that Bono from Ireland, from Dublin, from U2 fame said that we know capitalism has done more to lift people out of poverty than any social aid in the world. And, that's a horrible, horrible Irish impression, but that's what I love to play on the show. I do it through his voice rather than
You do
my
it with
own.
his voice than your own because, boy, man.
Notice that Napoleon Hill's plan doesn't have a timeline to it. So the question then would become, well, wait a minute, Chris, if I select what I want, create a plan for what I want, put that plan into action and have persistence, how long is it going to take? And Napoleon Hill would have told you as long as it takes. We don't know. I don't know how long it's going to take you. Jim Rohn would have asked, how long do you give your average baby to walk? How long will you give them to learn to walk before you just say, forget it, strap them in a chair and push them everywhere they go? You give them as long as it takes. So you might need a better plan. If you're many, many years into the plan and not seeing results, not getting, even though you keep giving, then you might want to change your plan. It's okay to pivot. It's okay to change course so long as you're not doing it too soon before it's like pulling the plant up by the roots to see if it's growing. Man, this would have been a doozy of a carrot if I just left it in the ground. Sometimes you have to leave it in the ground. Sometimes you have to switch lanes, switch courses, change lanes, get off this ladder. Like Stephen Covey said, oh, what if you get to the top of the ladder only to learn you've leaned it against the wrong wall? That's a terrible thing. So figure out where you want to go. A little book that I highly recommend, and people will come to me sometimes. I mean, I'll never forget a woman came to me and Tiffany and said, I'm thinking about getting out of the business I'm in. What do you think I should do? It's like, well, hold on, let's talk about it. I recommended this exercise for her that I'm going to tell you about, and it's found in a little tiny book by Seth Godin, and I recommend anybody in a quandary get it. It's called The Dip. It takes about 45 minutes to read, and Seth Godin says, look, are you in a dip and about to come through the other side, up and over the horizon to greatness, or whatever it is your objective is, and success, however you define it? Or are you in a cul-de-sac and you're going round and round, repetitive motion, going nowhere, and you'll never leave the cul-de-sac? You'll just go round and round for the rest of your career or life or relationship.
Right.
So which is it? Are you in a dip about, maybe you're 3 feet from gold, you're about to strike it rich and you give up? You're about to have success and you give up? No, it's too soon. Or you get to determine if you're in a cul-de-sac. And again, this repetitive motion, Peter Drucker coined the phrase purposeful abandonment. So it's not just quitting, because we're raised to think quitters never win and winners never quit. Well, sometimes they do. When Michael Jordan started playing baseball, it wasn't good. So he went back to basketball, and that's okay. He tried it, and he just wasn't the Michael Jordan of baseball. He was never going to be Pete Rose, and you can bet on that. Little inside baseball there. But you get to select what you want, pivot when necessary, and you'll become the great butterfly having struggled through the cocoon. But what if you're, take the ugly duckling? What if you're not a butterfly at all? What if you're meant to be something else, doing something else? It's okay to pivot, but then just reinstitute the law of economics and recognize you have to give in order to get.
So what was the method by which you helped this woman decide whether or not she was in a dip or whether she was in a cul-de-sac?
So that's a great question. Didn't help her decide, helped her see. So it's a little bit like the old adage about the people in the jungle, and the workforce is the ones with the machetes blazing the trail. The manager is the one, telling them to work faster, and the leader is the one who climbs to the top of the tree and says, wait a minute, we're in the wrong jungle. And so we just helped her see, because we were 30,000 feet above the situation, and she did quit. She did leave the business. She abandoned it on purpose. And she contacted us later and said she'd never been happier. It was the greatest decision. And she realized she was in a cul-de-sac with a business, and it really wasn't even what she wanted to do. She just had to end it up there. So she was really grateful. And it wasn't us. We didn't help her make the decision. We just helped her see the landscape with which she was traversing, and she realized it was a cul-de-sac for her.
Well, great. What was the method by which you did that? Quit slipping the question, Story. Is there an analysis? Is there a check sheet? How do I look at it and make that analysis for myself if I look around and go, boy, I'm in a cul-de-sac and I didn't know it? How do you open the eyes of people? What do I need to do that?
I think just understanding that analogy, that's what worked for me. It's what worked for this gal. Just understanding that sometimes it's just permission to look at something through those eyes of like, I can quit this if I want to. Knowing that it's permissible, knowing that there's no shame in it, sometimes allows you the room to make the decision. She walked into our offices already knowing she wanted to quit, but she didn't think it was okay. Once she realized, wait a minute, I'm at a fork in the road and I can take it, as Yogi Berra said, and she chose the option she already knew in her heart was best for her. And I think she just needed to see through distant and different eyes these options in front of her. And so again, it's something if you're struggling with it, my hunch is you already know. If you're struggling with that decision,
right,
you probably in your heart already know. And just recognizing some of the symptoms or signs. Like, in other words, if it's like, for example, and this is going to make you groan, I know it will, Michael, but I cannot wait for Monday morning. I love what I do, and I can't wait for Monday night, because that means Tuesday's coming. And guess what? Tuesday morning, I start my day. Well, I don't start my day, but one of my best highlights of my Tuesday morning is talking to you. And then this afternoon, I'll be doing my live radio show, and then I'll be with the rest of the week. I love what I do each and every day. However, there are things that I've attempted or pursued within the context of what I'm already doing that I realize, you know what, that's a cul-de-sac. I'm going to let that go.
Right.
And we either sell a division of the business, sell a property, or I'll abandon on purpose maybe a manuscript that I'm writing. It's like, it's not working. Okay, this is going the wrong direction. Move on to something else. These are the kinds of things you begin to recognize. So the more often you think about, is this a cul-de-sac or is this a dip? And on the other side is about to be something that I want. The persistence will pay off. Then the law of reciprocity or the law of economics will pay you back for that time. If you're in a cul-de-sac, you probably already know it, because you can look back and go, you know what? I've lived the same year over and over again for the last 2-3 years, and I'm in the same spot I was. So once you recognize that, then you can make the decision. I can't make it for you, and you can't make it for me.
We got less than a minute here, but I'm just going to say the 2 questions that somebody asked me one time when I was in a similar situation, and they asked me 2 questions. They said, where do you see yourself in 10 years if you remain where you're at? That was the first question that really made me think in the long term. The second thing is, if you had $1 million in your bank account right now, would you still be doing what you're doing? That was enough of a question for me to answer. I mean, that was an answer. Just those 2 hypotheticals. Now adding to the fact, are you in a cul-de-sac or are you doing? I mean, this is great stuff. Chris, thank you so much, my friend. I appreciate you coming on board.
My pleasure, Michael. And you are not in the cul-de-sac. You're a dip.
Wait a second. Wait just one moment. Hold the line, Chris. Chris Story, the man from Homer. Folks, we're out of time. Tomorrow's Wednesday. We should be hearing from Mike Shower. Be kind, love one another, live well. We will see you tomorrow. I got to say, Chris, those really were 2 questions. I mean, they're simple questions, but I really hadn't considered it, because I was like, because I felt like I was in a rut. I wasn't sure, where do I want to go? And my friend said, so if you continued on in 10 years, what do you see happening if you stay where you're at for 10 years? Are you in the same spot? Is there opportunity to be more big? And I was like, oof. And then he's like, and if you had $1 million just appear in your bank account today, would you continue to do what you're doing, or would you go do something else? And those 2 questions that was my jump start into making some changes in my life, and some of the best changes I ever made, quite honestly. But kind of running along the same lines. Go ahead.
I was just going to say, I heard a father ask his millennial son, if you had $1 million, if I just gave you $1 million tomorrow, what would you do? And he goes, if I had $1 million, I'd never work again in my life, and guaranteed never to have that $1 million. If that's your attitude, you're never going to get it. If you just think that the ideal is to lay on a beach and have umbrella drinks brought to you, probably the universe will ensure that you don't get that $1 million. But those are 2 good questions, and I think just your friend did what we did for this gal. Just you looked at something with a different perspective or just different eyes. And I think sometimes, either a therapist or a coach. And what I love about coaching versus therapy, and this isn't castigating therapy, because it's definitely worthy for some people, as long as you go with the intention of getting better, versus just, it's like the old adage about the light post. Some people look for a light post for illumination, others for support, and there's something to lean against. And so what I love about coaching is it starts with what you're doing right, what you've got already going for you. You have so much potential. Is it being wasted? And is this persistence something that is going to actually just keep you in this circular motion for the rest of your life? Or is it, and then say, it's okay. See, it's almost like a roundabout. And there's an off ramp here. Let's go this direction, quit this, start that, and take what you've learned and move forward. But yeah, again, it's just on that perspective that a coach, and that person was a coach in your life, can give you that little extra perspective. And sometimes that's all you need is one and done. Sometimes you want to go in for this kind of coaching or helpful vision for months, but it doesn't have to be forever. And then you can make your own decision.
So you said you're either in a cul-de-sac or what was the other one? I've already forgotten it.
Dip.
Yeah, dip. You're in a dip or a cul-de-sac. Yeah, you could be coming out of that dip. You don't know. I like your idea.
And the Napoleon Hill story, 3 feet from gold. It's a literal true story. The guy quits digging 3 feet from the gold vein. And so it's the same thing. That's a dip.
No, exactly. I do like your idea of the roundabout, though. The roundabout is even better than the cul-de-sac because you're in the roundabout and all you're doing is going round and round, and you keep not paying attention to the off-ramp that you could take to keep you from going round and round and round. And I like
you have
that.
options.
Yeah, until you look at that bird's eye view and realize, oh, there's other roads less traveled that I could take. Sometimes those roads are scary, man. Sometimes you got to make a decision. And, there's comfort in that rut. There's comfort in that cul-de-sac. You know everybody. You know all the things. You are friends, and you don't want to upset anybody, and you don't want to do it. But sometimes you got to make those changes. Sometimes you got to do it. It's and it could be scary.
Have you ever read anything by Art Williams? He created the insurance company called A.L. Williams, which eventually became Primerica.
No, I haven't.
He was a high school teacher and a football coach and wanted to get into big business, and nobody would return his calls. The headhunters, the executive placement people just would never return his calls. So he started his own company in 1977. By 10 years later, he was the largest term life insurance company in all of North America. So it's just about pivoting. He could have stayed a coach and a high school teacher for the rest of his life, but he wanted to do something different. So he got off the cul-de-sac, as he determined, and went into big business. And other people might hear that and go, my God, I would give anything for tenure and a retirement plan and the 3 months off in the summer. And fine, then teaching in high school sports wouldn't be a cul-de-sac for that person.
Right,
it would be exactly the right path. So it's unique and individual to each of us, like our own fingerprint.
All right, my friend. Well, I appreciate you coming on board. Thank you for joining us. As always, you're a breath of fresh air that I needed today just to kind of alleviate the anger in my heart. So I appreciate you.
All right, Michael. Have a good day.
All right. We'll see you later. All right, folks.
Bye-bye.
We are out of time. We got to go. Tomorrow is hump day. Yeah, baby. Hump day. Excited about that. We hope you have a good one. Be kind, love one another, live well. See if you're in a cul-de-sac or if you're just in a dip. Make that decision. Appreciate you. We will see you tomorrow. Stay ungovernable, my friends. We'll see you then.
We've shed our terrestrial radio skin, and now we are slimy lizard internet people. It's the Michael Duke Show.